Good morning, ladies and gentlemen. This is Frank Cluse Trading. It's November 6, 2017, approximately 7:54 a.m. on a cloudy morning here around the New York City, New Jersey waterfront area. This is a pre-market webinar. Pre-market videocast for the coming week. We have a very busy week ahead of us, and like to share a couple of thoughts and walk through a few charts over the next 20 to 30 minutes. Keep this short and straight to the point. Full disclosure, this is purely for financial education and not for any solicitation or advice. And we shall begin. So here we are this morning, a Monday morning. Lots of, quite a few dramatic events overnight, as I posted on the charts in the last half an hour or so, on the overnight overseas markets, and they seem to have recovered quite well. Saying all that, I'm going to walk you through a bunch of technicals what we think might happen. Keep in mind that this is a very politically, diplomatically, and earnings-wise supercharged week. So we are going to see an extreme amount of volatility. There is absolutely no question about it. We are prepared for volatility at all given times via these tactical precision charts. And without these roadmaps, it would be almost impossible to trade these type of robotic, high-frequency trading, black box-driven, computer-driven markets. Period. That's it. There's no two ways about it. So emotionally charged traders, as I always like to say, who are just watching prices, in my opinion, will have a very difficult time effectively managing their trades, as I keep on posting, which is the reality of what we do on the trading business as well as on the investing side of the business. Because if you're not watching the roadmap, which are the tactical charts, then the price alone, which are extremely fluid, random, and volatile at many given parts of the trading day, every single day, are going to throw you off that trade. There are no guarantees in the market. There are only probabilities. If you have a high probability of a trade working based on the technicals, based partly on the fundamentals, based on the overall macro environment of the market, how the market overall is reacting to good news, bad news. That's the macro environment in the market. Once you mix that up, as I do, and I do the hard work of processing all that information, analyzing all that information, and then passing it on to you guys in the form of real-time private Twitter feed, which is continuously delivered throughout the trading day, 24/7 throughout the trading day, to walk people through every single pitfall that might come along, or the rallies that come along. The bottom line is that all those three things have to be taken into account for you to effectively manage your trades. So saying all that, let's just straight into the technicals. We had overnight dips on the Asian markets, which were pretty scary. Hong Kong was down a lot. China was down a lot. The Chinese central bank governor issued a dire, a very strict, stern warning on the PBOC, that the People's Bank of China, that's the Federal Reserve, about inherent risks, credit risks in the Chinese economy, because the Chinese economy is very leveraged. Lots of borrowing, lots of stock market gambling, all kinds of stuff, gambling in the property markets. And he basically issued a very strict warning. So the markets fell very hard. Hong Kong was down a lot, Hang Seng, and our futures were down about 7 points. I think at one point more than that. So things seem to have stabilized quite a bit. Our futures are only down about half a percent, only 50 cents. And we are back on the E-minis at 25.8225. Let me just walk you through very quickly. I'm sure you guys will find it very helpful. This is the chart that you need to follow between now and till things change. How about that? Between now and, let's say, the next week or two, or when we breach any of these levels. Okay, because once these levels are breached, I'll obviously adapt to the next set of charts. I do put out many different platforms, as you know, investing.com. This is the Thinkorswim version. But I'm just focusing on the relevance of what is now. So if this breaks down or this shoots up, That's what subsequent is going to direct correlation with your trades on the front side. Most of your trades on the front side. Because some swing trades do not react to markets. We have seen what's happened with the Junos of the world. We have had spectacular winners, swing trade winners, as well as intraday day trading winners. But for active traders who are trading some of the fast, high beta momentum stocks, the E-minis and the NQs, which are the NASDAQ futures, the NASDAQ minis are the most critical aspects to keep an eye on, and I keep on refreshing and updating them all through the day. Let's go through the minis here, then we'll go through the NQ, and I think that's going to be a substantial help to all of you guys. So here we are. The lower end of the scale is right now at in the red line here. You can see that 25.42. Let's call it 25. Yeah, let's call it 25.42. Round off the decimals a little bit, to the lower side. And on the upper end, we have 25.85. So what we really have is a 32-point band on the 32-point band, which is roughly about 150 to 180 points on the Dow Jones. Between here to here. That's the trading band that we are in. It doesn't happen every day, but that's the trading band we have been in since the 19th of October. All right, since the anniversary of the 1987 crash, right? 19th of October, right there. 19th of October, and here we are at where we are today, which is on the 6th. All right, so let's make it that the markets move on 30-day cycles. How about we keep it that way? All right, so on a 30-day cycle, November 19 is going to be a Sunday. But the 17th of November is monthly options expiration. We know from experience, overall, there is a high probability that the week and running into monthly options expiration on the 17th is a bullish event. However, prior to that, we get a lot of choppiness. And prior to that is the week that we're in right now, which is the 6th, 7th, 8th, 9th, and 10th. 5 trading days, right? Till Friday. Doesn't mean everything's going to be all peachy and everything's going to be all Armageddon, like, we're going to fall apart. But I'm just giving you the overall sort of nuances and the sort of cyclical, weekly cyclical stuff that happens with the markets. Going into the middle of the month, we get into turbulence. And that middle of the month rushes into next Wednesday, which is the 15th. So we run into turbulence generally plus minus 2 or 3 days prior to the 15th. And given the fact that the 17th of, and this is very important, the 17th of November is monthly options expiration, expect at least 1 to 2 quick severe dips, which in my opinion can be bought. Because seasonally speaking, November and December rushing into the end of the year is a seasonally speaking, has an upside bias for different reasons. Thanksgiving's coming up, Christmas is coming up, but we get some really sharp swings along the way. And then we rush towards the Christmas holiday side where the market tends to rally hard. Now, all those things are not constant. Things can change. There's a lot of political, economic, tax policy consequences that we're dealing with, news flashes or news bombs, as we call it, that we're dealing with every single day. But I'm just giving you the overall picture. So let's stick to this here. So let's stick to this chart. So you got 25.85, 86 on the upper end. You got 25.42 on the lower end. That's roughly 40 to 44 points, right? 25.86, 42, yeah, 44 points. So 44 times, let's say 6. So you're talking about a 200 plus point type of swing that one can incur. Let me change the color here. If I can, if it allows me. Won't allow me? Okay. Then it sticks to 1 second. Not sure what's going on. I'm trying to get the, okay, it is allowing me. There we go. I like this color. Well, I don't like this color. It shows up more. There you go. So you got roughly 200 to 220. Let's call it that way. All right. Type of plus minus swing. Well, we're on the plus end here. So we could get a 200 point, keeping it simple, type of movement, which could be like this going in. So be prepared for that. It can happen overnight. which are completely out of our control. That's what it was looking like last night. Not 200 points, but at least 100 points, and or a little bit less. But it seems to have phased. Seems to have recovered that rally. But let's keep that in mind. Let's move on. Next move here. We have a structured chart with an upper end. We have multiple lines that I draw on my charts. They're not fully drawn here, but we'll do it right now. And you can see what the exact levels are on the market. And I highly suggest that all of you look through my previous charts, which have all the lines drawn. Okay, so here we are. That's a major reversal point where the market was breaking down, and that was only last Friday. And we shorted the market right when I saw this candle developing. Went up about 40%, took a little bit of profits out. I didn't have that much anyway, because these are intraday lottos we were playing on the short side. The longs were still intact because we had the 2580 calls, which went from 2 to 6 from the previous day. The reversal previous day with Thursday was 2562. I kept on saying buy the 2580 calls, took some out towards the close, which is right here. Left out a bunch in. Did a counter trade on the short side for a quick scalp, which didn't turn out to be a net profitable trade. The first trade was profitable, but the little bit that I left in there wasn't profitable because we had a very sharp recovery, as you can see, which started off at 10. I expected the market to basically come down and retest 2570, but it doesn't matter what I think. It's what the algos think. One of the reasons behind it is I explained it to a terrific ACS student early on Saturday. That primarily there was a lot of short positions, I believe, that were looking at the 2570 level, and those hedge funds got blown out with this massive green spike and a follow-through move. Massive green spike and a follow-through move on the candles, which took us all the way to 2585. Well, didn't matter because the other ones, the 2580 S&P calls, went from 2.5, the original trades, which ended at around 4 and change at the close the previous day, went to went to $7. Great trade. Do the math. You're looking at 200+% on your money. And on a net average basis, maybe 150% on your money. So this little minor 40% type of loss on the remainder of the puts were fully absorbed by a very large move on the calls that guys were positioned in. And I did turn around and said buy the calls again intraday on Friday. So that's tactical trading. There's nothing around it. No one controls it. The machines do it. And I am the fastest messenger on guiding you all to do what you need to do. How you react with speed, flexibility, mental calibration, your internal risk level, whatever, is completely up to you. On that note, let's take a look at this chart here. So we got an important level here at around 2573. We got another level here. You can see that. All right. I'm going to zoom in here because we have already seen, I've shown you the ranges. We have a massive, actually before I go there, hold on. We have a massive double bottom, which I walk people through. This came off from all the way down here. So you can call this it was all the way down here, then fell, did this. That's a W formation known as a dragon bullish. We have another dragon bullish formation, which I showed clearly. And that was a double bottom. So this was the latest dragon bullish formation right there with a double bottom, which is extra powerful. And it completed the pattern. It went back towards and testing the highs. Retest of the old highs. Standard procedure in bull markets. So now that we've seen the bigger picture, let me zoom in so you guys can see what's going on now. And this is nothing new to tactical traders because these charts are posted constantly on the chart. What I'm doing is you're listening to my lovely voice, walking you through it. I'm sure many of you will find it helpful. I'll highly suggest, like I always do, Sign up for the advanced ACS group sessions for a very minor fee to cover the cost of doing that, and and you will be highly rewarded in the way you manage your trades. That I can assure you. You understand things better, what I'm putting through. Your reaction time will be quicker, and regardless of if you're a full-time trader or a part-time trader, it doesn't matter. I am giving you 24/7 guided, actionable, precision, tactical charts, which doesn't matter if you're a full-time. You can look at it and you can basically decide what you want to do. And many of you do, and I'm very proud of that because that's the nature of the business. No other service stays as involved with the markets through tactical charts and through engagement with their members like I do on the public website chat room to a very large degree. No other service does that to this degree, precision degree, not emotional fluff, but pure technicals, which is really what drives the market, computers. And of course, some technical stuff that I put out there. I mean, fundamental information that I put out there also. I engage with my members, answering all their questions as much as I humanly can. So saying all that, so this is what we are. So here are these red lines are your supports, and there are multiple supports, but the pattern overall looks good. However, a bearish pattern could be looked on as can be detected as a head and shoulder also. That's the nature of algo trading. And I'm not asking you to do algo trading. I'm saying that's how the markets are done. Here's your head. Here's your left shoulder. Okay. This could be a possible double top. So this could be a head. This could be a left shoulder. This could be a possible right shoulder, which means the supports here are what we call the neckline. Remember, the head and shoulders look like this. There's your neckline, just like that. Okay, they're not as perfect on the actual battleground of the trading marketplace, but can be detected. So if that's the case, then that level here with the magenta line at 2574. And again, you don't need to be experts on E-minis and stuff. I'm just showing you, giving you the exact guided tools. I mean, a precision walkthrough. So when you look at my charts, you'll say, okay, I see what he's seeing, and I got to be careful because he's doing that. Okay, this is not a question of, oh, I hope it's going to jump this and that. It's what the markets, and many times the markets will fool you, like it fooled me a bit on that one particular trade on the S&P puts, which looked like they were going to come down here, retest this, and then bounce. Except it did it in midair off the support, which I should have been watching, to be honest with you, which is the 3450. That's the orange and the red line. It hit the 34 SMA. Remember, this is a 1 hour chart. That's what traders should be using. 15, 30, 1 hours. The dailies are more for keeping a more longer term directional bias on the markets. But anyway, fast moving stuff happened in some cases. The 5, well, 15, 5 has a lot of noise, a lot of zigzags. The 15, 30, 1 hour, and then the 4 hour chart, which we're going to quickly look at as time permits. So it just suddenly turned. There's nothing I can do. She get out of it, because once the second candle develops, that's it. That short trade ain't going to work. So, and then it broke out over the downtrend line. Remember, these red lines are downtrend lines. Everything is in place here. And once it broke the downtrend line, you take your minor losses and you get out. And you stay long with those calls, or you get into the calls at that point, because this is very fast. It happens within a matter of half an hour to an hour, sometimes an hour and a half. In these fast-driven markets, even 5 minutes is a long time sometimes. So for active traders, they have to basically watch the charts. So here's your neckline. And if that neckline is around 25.74 to 73, if it breaks that, it's not the end of the world. That means there is a higher probability that we're going to test. Remember, this is a major uptrend line. You can see that, the dotted white line. It can come here and bounce from here. It's done that. These are big, reference points. And so it can move from here and then move really fast. In the meantime, if that uptrend line breaks, then we got more pressure to retest this downtrend line. Remember, this was a downtrend line from last Wednesday. This one. It's not just drawn there for fun. These are all there to save you money, make you money, and keep you smart, and hopefully less poor. Okay, on doing stupid things just by looking at the prices. I mean that. I've gone through that many years ago, and I know it. So anyway, so here's your downtrend line, and that downtrend line is around the 25, around the 25.56 level or whatever. And many times there is a downtrend line retest. So it comes down here, and then it bounces from here. In the meantime, everyone's freaking out and all that stuff. And this is also a major support level. And you can see that right there. 25.55. Breaks 25.55. You got a quick, fast free fall. No question about it. Back to that 25.42 level that I just showed you as the lower end of the trading range. So from here to here is a 200-point move. Will that happen right away? I have no idea. Can it happen? Absolutely. Can it happen overnight and then reverse before we even wake up like it did today? Absolutely. What you learn at Crusade Trading and the monies that you make at Crusade Trading, this is the real stuff, not the fake news, and I mean that. All right? Not the garbage that you hear, the same old standard, oh, if you do this, this is going to happen. No. I teach the precision tools, and then when you're on the battleground, you'll fight your own way out to making a profit with the help of all these charts and my alerts, which are both on the entry and the exit side in most cases. Or at least I let you know that I'm taking down a substantial amount of my positions. So that's basically it. Walk you through again. Major support. You can see that on the line. Markets are very fluid, lots of chop. This is looking like as the markets open, this is looking like a head and shoulder. Head, left shoulder. You got the 34.50 still with a gaping mouth. That means they're positive, they're trending higher, so that's good. You got support here at this downtrend line. That's a minor support, but still, futures are down about $1.25 right now. So this is looking like a head and shoulder. So putting out a little short out there, as I most probably will, towards the 25.75, let's say, or the 25.80, 25.75 intraday scalp Monday. Could work, but you got to be quick. If the neckline breaks and the uptrend line breaks, we got more to fall. And then, of course, all the way down here. And I don't think that's a one-day event. That could happen. In my opinion, what's going to happen is market's going to come down here, find major support, and then move from here, try to attempt to break the highs, kind of vacillate, fall again, and do the same old stuff over and over again. So the short-term trading range that you should be looking at over the next 24 to 48 hours, in my opinion, which you have to keep an eye on this, as I keep on posting these charts every half an hour or so, is that this is the range, which is approximately around 25.64, and there's your box. 25.64, 25.85, roughly 20 points, which is roughly plus minus 100 points on the Dow. And there's going to be a lot of news coming out. There's stuff going on with Wilbur Ross, in the sense that some of the internal files were leaked. There was a hack of a major Bermuda corporation which handles big offshore accounts. I like Wilbur Ross. I think he's a real smart cookie. Well, real smart business cookies, they hide their money. I'm not going to, and part of it is that he's going to get a lot of heat on that. There's no question about it. Is it really criminal? I don't think so. Because, people who have big money have offshore accounts. And the Bermuda offshore account now has been revealed. And did he disclose it on the files before he became Secretary of Commerce? I don't know. He's saying yes. But I'm not here to judge that. I don't judge anybody. Okay? I have my opinions. So that's going to be one thing. The second thing is Donald's on the Asia trip. That's going well. President Trump. We got earnings all through the week. And so that's another thing. Tax policy stuff, what's going to really drive the market, okay? Because remember that they just, by Wednesday, we should have, I believe the Senate tries to pass it and ratify the tax bill so it goes to the president's desk sometime the latter part of the month. So he wants to get it signed by Thanksgiving. President Trump wants to get it signed by Thanksgiving. So there's going to be a lot of volatility based on that. And then just general manufactured volatility. So this is what you're looking at over the next 48 hours. This is looking good, but we're starting to get overbought. That's your full stochastics. Keep an eye on that as I post it. Not, nothing alarming here. Let's take a look at the 4-hour. Technical analysis is like art. You can't explain it in one single swoop and say, okay, that's it. Sometimes you can. When it's deep oversold, it's a buy, buy, buy. We are not deep oversold. We are not heavy. We are overbought, but we're not like extreme overbought. From a sentiment standpoint, we're certainly not extreme overbought. And this chart is looking pretty okay. This is your 4-hour chart, the closest thing to a daily. This is starting to ease back a little bit. You can see that, the crossover down. But at this point, if you quickly look at this chart, and the first glance, it doesn't look too bad if I look at the candle dynamics of what's going on. This was last night. This is what we were. We retested the 34. How beauty is this, right? 25.75. This is where we are at this is where we're at 1 in the morning. And this is where we are right now on approximately around 8:20 or so on Monday. Okay, this is where we are right now, 25.81.75. So this means that another retest possible. If we do a big breakout, all bets are off. That means that we're really going to ramp. Is it possible? Look, anything is possible. I'm not going to sit here and try and explain that. That would be a monster breakout. That would be a major range breakout. That means the market is going to go to 24,000. Today? No, but this week. If something like that happens, because that would be a big bull flag. There'll be a little consolidation, and then it'll have to break out again. Just the way it happened here. Now, okay, you had little consolidation. In this particular case, it pulled back. Didn't last that long. It was over a weekend. Boom, it went higher. So that's your bull flag, and then higher. So that could happen too. I am not uber bullish. I'm not uber bearish. But we are on the upper levels of the market right now. So you are, what happened here? So you are going to be held hostage to heavy volatility swings. Let's look at the daily. The daily should give us a clearer picture, and the daily is telling us we're okay, because the daily charts on 1 second here. Before I do expand it, because it kind of flattens out the thing. This is looking good. This is your daily. It's still shooting higher. The 80 line, and then the 80 line is starting to turn up on the stochastics. We're at 87. We're getting up there, but we're not at the extreme levels, which are generally around 100. But just look at the visual. Just look at the structure. Don't have to worry about the numbers. We are moving higher. We're starting to overbought. A little bit room to move. And when we zoom in this picture, we are seeing multiple green candles. 1, 2, 3. And this looks like, believe it or not, this looks like, I'm going to clean out the chart here so you guys can see. There used to be a function on Thinkorswim that hide the drawings. I don't see that anymore, which is a real pain, on whatever. So I'm going to have to clear the drawing set and redo it for all of you. So looking at this, the bullish reading on this will be that this is that's a bull flag. All right, I've called these a lot. Bull flags. This is a very upper level bull flag. If I was really, if hedge funds were really short right now, they're pretty scared, because the formations, the internals, the multiple green volume bars, all suggesting accumulation, even though even though it's slowing down a little bit, for reasons that I told you. We have tax reform, very positive. Look, the corporate taxes, which were the highest, at least on the headline level, on the U.S. from 35%, dropping it down to 20%. I don't care if they do it in 1 year or if it gets phased in 2 years. It automatically boosts the profit margins. Automatically boosts the profit margins of U.S. corporations. If your tax rate goes down to 10% and you're paying 30% on your taxes, the net money that you keep in your pocket is going to go higher. So net profit margins go higher. All kinds of metrics go higher. So the market can value itself higher. That's the bullish argument. Global growth has been synchronized. It's going nicely. Japan, China, despite the risk, still growing very nicely. And here we are. So this, if I, hedge funds who are heavily, and they have billions of dollars on the short side, are starting to really worry, because if this bull flag breaks out, then you're going to hit 2600 real fast. Well, that's around the corner. You can also look at this as a rising wedge. Now, what does that mean? And this is technical stuff. So any of you who have not bothered to take a single ACS class, you're getting this stuff for free. So this can be looked on as a rising wedge, in which particular case I have to draw this. It's more of a triangle formation to me, if you ask me. This is the fight going on here. And the rising wedge, you can draw it by saying right there. Okay, multiple points of contact, and that's a rising wedge and a triangle formation. What's a triangle formation? Things are getting narrower, and it's looking like it is going to break down or break out. Internal is suggesting higher probability of a breakout. However, well, on this one, on the 15-minute, this is a very short-term chart showing that we're overbought, but a retest of the previous highs, which is only 18 points on the Dow, is very doable. Now, on the longer term charts, let's look at the weekly. The weekly is still showing a lot of strength. A lot of strength. Remember, energy has been a big prop under the market. If you look at the oil charts, I'll post one today. We're heading to $60. So that's a rising wedge. Remember what happens with rising wedges? They tend to basically correct by going into a profit-taking mode. And that profit-taking mode is known as a that's a rising wedge. It looks like this. Prices get narrower and narrower, lesser and lesser participants, and then it goes into a consolidation phase, which is known as a consolidation channel. So is it possible that happens? That's what I was showing you, what those 100, 200 point type of ranges are. It's all calculated, believe me. News will come, noise will come. But in my opinion, these machines are programmed, not all of them, but some of them, at two predetermined levels. Otherwise, with a warning like that out of the Chinese central bank governor, who's a very serious guy, that China faces some major risks on the credit side, we'd be down like 300 points in the old days. So what happens? This is also a bull flag. It attempts to break out again. So consolidation, in my opinion, I gave you the dates and stuff on the first part of this thing as to when we might be getting it as we get towards the 15th of the month. So overall, if this rising wedge should consolidate, and then from that consolidation, whether it be 100 to 200 points, we should break out. In my opinion, we will as we get towards never short Thanksgiving weekend. Never. And that's also coming up. So that's basically it, guys. 35 minutes coming up. This videocast will end. I'm sure from a technical standpoint, some of you who are eager to learn and passionate, some of you haven't bothered to sign up for ACS, I welcome you in, because everything that I've taught has helped every single ACS advanced coaching student. On that note, let's have a great day. Nvidia's down just a little bit on the Intel AMD tie-up. I'm not bothered with it unless my charts are telling me to. Have a great week. Let's do it, guys. Stay clueless, eh? Stay focused, stay flexible, be strong, and most importantly, keep an eye on these unbelievably precise tactical charts that I keep on posting all day long, 24/7 on the Clueless Aid Trading real-time Twitter feed. Let's have a great week, everyone. God bless you all. God bless the USA.